Okay guys, Sam here back with a little video update here on Algo Studio Pro. Now we have received a good number of requests of late. They kind of go something like this. Hey, I've invested in Algo Studio Pro. I'm kind of short on time, not really sure what I'm doing. I'm kind of struggling to find something that's profitable. Could you guys maybe share something that's profitable? Well, okay, I mean, I understand that thinking, and I don't want to be disrespectful of that request, but you got to understand that's really not the business that we're in. We're not in the business of selling algorithms. We're in the business of giving you a tool with which you can create your own. So my purpose here in this video is to show you it's not that hard to find some ideas and put together a profitable algo. Now, it does take a little work and some back testing. Okay, right? I'm not saying it's push button simple, but it may not be as complex as you're thinking. And I think I've said this in many ASP videos. Complexity does not lead to increased profitability. And as a matter of fact, it's often quite the contrary, right? The simpler algos tend to be the most profitable. So this is a very simple algo, and I just got it from, oh God, here, I'm just going to use this as an example. I'll just bring over YouTube here. All I did was search profitable day trading indicator setups. I mean, it's probably 2 million results, right? Oh, here's the Trading Lab. That's a good one here. Oh, Trade Pro, another one. Trade Hero, right? They're all the most amazing results you've ever experienced, tested 1,000 times. It's the greatest setup ever. Well, okay, I'm not saying they're not, but we don't want to take their word for it. We want to do a little testing, or I mean, this just goes on and on and on. Here, oh, here's some of ours right here. So you've got plenty of these, no shortage of ideas, right? You would never run out of ideas. Okay, so having made that point, let's see what we can do with something relatively simple here. So this is one. Put this together here this morning, right? It's relatively simple. And now, okay, so I've got a 2,000 tick. A chart of the ES. Just to show you here, I'm running 30 days of data. Right, so we're just going back 30 days of data. I'm right up through Friday's close. I'm recording this on Saturday, the 24th of August. Okay, right. So this is a very simple algo, but I think you'll be pleased with what you see here. So let me let's see. Let's bring over the designer here. So super simple. Okay, all we're doing here is we want. Let's push this off a little bit so you can see it better. Okay, right, so close of the current bar is greater than or less than, right, as the case may be, a 21 EMA. Drop dead simple, right? A 21 EMA is kind of magical with a 2,000 tick ES chart. It's just very, I mean, you can just look at it. I want to be long here, I want to be short here, I want to be long here, I want to be short here, right? You probably looked at it before, right? So, but how can we build an algo around something a little bit more sophisticated than that? Well, the next thing I'm going to do is work with a MACD. Now, I've just got a default MACD. All of this is native Ninja stuff, right? There's nothing. Oh, pardon me. I have our initial balance indicator on here. Everything else is just native Ninja stuff you could easily find. It's all free. MACD. All I've done is just with the MACD is just make the actual lines transparent. So I'm just focusing on the difference. And I'm using that difference as plus or minus 0. If it's above 0, okay, bullish. Right? If it's below 0, bearish. It's super simple, right? Drop dead simple. And then I'm using a CCI. Well, now a CCI is a non-bounded indicator. That's why I like it, right? So it tends to, if it's going to go over 200 or below 200, it doesn't stay there very long, right? So, I'll let you do a little digging, right, if you need some explanation on what the CCI is, right? It's very similar to a Stoke or an RSI. It's unbounded, right? So you get these wide swings. But the premise is between plus 100 and minus 100, that's kind of a chop zone, right? You don't know which way it's going to come out of there. When we get above 100 or below minus 100, you're in trend mode. So you'll note here what I've done with the CCI is, well, okay, I want the current period to be greater than 100. But I want it to have come from a reading of below minus 100. So if I look at it this way. So, I guess I can do it. Push this way off here. Let's get, what do I want here? It's crosshairs, right? So, okay, so as we come here, now note, we come under 200 here. Pardon me, we come under 100. We actually get to under 200, but now we're coming back, right? So what I'm looking for is the snapback. I want it to be going the other direction. Same thing here. We get up above, again here, we get above 200, but now we're coming back the other direction. So the trade I'm looking for, let me get rid of that. Oh, come here. is this trade, right? When it comes down this way, right? That's what I'm looking for. And the same thing here. We've gone below 0 here, and you can see the same thing here, right? So there, here I've got the trade entries marked. So you can see, okay, all those conditions met. Okay, I want that trade. Now for exit, all I'm going to use for exit is that if it closes on the other side of that EMA, as you see right here, so I want all of this, don't take me out until I close on the other side of the EMA, right? Same thing here. If I'm long, don't take me out until here. So I get as much of that, right, as I possibly can, right? Assuming, you know, we're allowing for a little give back here as it rolls back towards the 21 EMA. Very, very simple. Now the trick, or let me rephrase that. The challenge with any algo that you're building is working through the ATM and the optimization, and being careful of the tendency to over optimize when you're optimizing the time that it's trading. So the challenge, I think, for anyone building an algo is to see if you can get it to be profitable during RTH hours. Right, if you just click all and then, you know, run optimize and optimize time, right, it's very easy to end up with something that's going to look fantastic. Oh my God, it made $25,000 in 30 days, but it's just not realistic. It's going to be over optimized, right? And some of the, I did a couple of videos here very, very recently on the ATM and how to avoid that over optimization. So a good way to do it here is to avoid optimizing for trading hours. Right, avoid that. Right now, you may or may not want to use a stop loss. Right, in this particular case, I'm using a close the opposite direction, right, of the EMA. So I'm not overly worried about something running away from me because it's not that far before it's going to get back to the 21 EMA, because it's rare that it would get too far beyond it and be on the wrong side of the market. Right. Hopefully that makes sense. So with that said, so I've done here. I've done a little optimization, but what my focus was, I wanted to be profitable during RTH hours. Now I'm, you know, in the States, in Texas, right? So that's better suited to me. Not that I would be opposed to running it overnight, but for testing its robustness, I want to know is, can I get it to be profitable between RTH hours, right? That's first hallmark of an algo. But it could be that you're trading in Europe, so you might go from 2 to 11:30, right? See if you can get it profitable in those hours. Right, that just something to kind of keep in mind as you're building and designing, and careful of that over optimization. Okay, so I've run the optimization here. I've got essentially this is. It's got a risk reward here of 8.6 to 1. Okay, that's great here, and it's using an initial stop of 28 ticks. Okay, that's fine. So if I turn on the trades and we start to see some of this, well, here's one. Okay, well, here's a better example. Right, so there is a trailing stop with this. So let's bring this back over. Right, there is a trailing stop here when we're 17 ticks in profit, trail with an ATR of 2.20. Okay, so here we see, right? So it would have. It's whichever gets hit first, right here. In this case, the trailing ATM gets hit, so it locks in that nice profit. But if it had waited until it crossed the EMA, you might have gotten a little bit more here. But again, right, money management is critical here. Here's one where it goes short here, and immediately, it was what example I was trying to reference before. It's not likely to get too far away from the wrong side before it gets stopped out. So we go down here. All the conditions are met for a short, but it turns around and we're so out here relatively quickly. Now here's one where, too bad, right? The ATM took it out here on this little snapback, and then you're going to miss this. It's, you know, welcome to algo-based trading. Here's a nice into the close, right? Nice one here. The trailing ATM takes it out again. Right, so always a good idea. Go through your algo and those trade results here. Now I'm asking it not to take trades in the overnight. This is more advantageous with a tick chart here, as you won't get all the, you know, if you had a 1 minute or a 30-second where you get a long scroll through lower volatility times. So not always, right? I mean here, you know, well that's in the prior day. But there are times when you'll get a decent move in the overnight session, right? It's just condensed because it's a tick chart. So you always want to go back through these and look, say, okay, how'd this do? Okay, up, stopped out. How'd we do here? Trailing stop took it. Well, let's get this back here so we understand what we've got here. So I would be comfortable with these parameters. Now let's put the stats up. Pretty good. Nothing fancy here. I mean, again, there's probably 5,000 examples like this, but you may or may not find that you can get them profitable. And certainly, you know, the challenge would be, I would encourage you to see if you can get it profitable in RTH hours, right? Whatever the asset you're trading is. But this is awfully good results, right? Now note here the win ratio is only 38%. Why does it work? Look at the average win, average loser, right? 466 to 154, right? That's a key metric that I look for. Now I also want to pay attention to the largest loser. Biggest loser here is 366. Okay, I can stomach that, right? So with a is there anybody who's not trading with a prop account, right? So for all of you that are trading with a prop account these days, right, whether you've got a 50K or 100K or 150K account, your accommodation here for drawdown here, the max losing streak, the daily drawdown here it's positive actually, right? It's a very light drawdown. So this would be very well suited to those of you that are interested in trying to qualify through a prop firm. This may be well suited to that. So I've got 30 days of data. It only found trades on 22 of those 30 days. Interesting, right? Some days it's just not going to be there. But we always want to see a total of at least 100 trades, right? We got 159 trades. Profit factor is 1.88, quite good. So let's go over to the reports and take a quick peek here. Let's see how we look here in our RTH. Well, okay. So, I mean, you might consider, okay, 11:30 doesn't look so good, and 3 o'clock doesn't look so good. So that might be something just to test on that. So let's take out 11:30. Let's see, is it dramatic? 11:30. Well, that's already better. What was the other one? Here was at 3 o'clock. Let's go back to 3 o'clock. 3 o'clock. Take a look. Pretty good. Pretty good, right? Let's go over to Monte Carlo. Let's check for a little slippage here. What if in the default, I have it set to where I always include 1 tick of slippage on entry because we're entering at the market. So let's add another tick of slippage to 50% of the trades and run that. See how robust we look here. Better, right? That's a little deeper than you might like, right? So this might be, okay, I've got a good starting point here. Maybe the little more refinement here would be necessary because remember, Monte Carlo is just taking what do we got, 134 trades? It's randomizing the order in which they take place. It's okay. I mean, there's some pretty nice numbers up here at 20K, but remember, it's the range. It's the range. So could you withstand a $2,000 drawdown here? Well, of course, that's a function of what you're trading and your account size. Keep in mind, you don't have to trade this in the ES. You might trade it in the MES. Right? Maybe you're trading with 2 lots or 3 lots in the MES to reduce some of the potential drawdown here. That would be something to consider. Now we come back to our ATM. What we've done here, back to our logic here. It may be that we can do a little more refinement here. We get, the drawdowns are not dramatic. But if we go back through those trades, pretty good, right? Pretty good, right? That looks good, right? You just look where it is in relation to that 21 EMA, right? And these are the confirmations here. So you don't. Now here's one. Oh God, what a shame that we missed that. Why do we miss that? 10:30? Maybe it's tied to the ATM that we don't have that. Oh, we've got that, right? So for some reason we don't have the trade here. What the conditions weren't met. So let's look here for anything else here. There's a good example here. The other thing I always want to look at is I want to look at my losers. Okay, I can understand why it went short here, and I can understand why it was stopped out here. We got to the other side of the 21 EMA, so I'm out quickly here. So I could look at trading this without a stop at all. Right now, if we go back to the ATM, you'll recall it's using a 28 tick stop. May or may not want to, it would be kind of thing to do some testing. What if I took that out, right? It's going to dramatically alter it. Not bad, right? So what that's essentially telling is almost no change. So what that means is that it's not hitting that stop. It's exiting per the conditions prior to hitting the stop. Interesting, right? So it's something. It looks like because we have our biggest loser here is 491. At one of them, all right, it hit the stop. Or there was enough distance back to the EMA that it was tallied up to be a fairly good loser. But look now at the average win, average loser, right? It's almost 3 to 1. Excellent. That's just what you're looking for, and then that's a nice curve, nice equity curve over 30 days. Well, okay. Does that mean dive in and put the kids' tuition money into it? Absolutely not. Of course, it means okay. Maybe I've got something I want to start testing in Sim. Maybe we run it for 2 weeks or 30 days in Sim. Maybe you test it on the MES. Right, always test, right? Make sure you're getting the results that, the back test is a back test, and make sure the forward test is giving you encouraging results. All right, but this would be a good one just to get started. It's very. I'll put this in the Discord for those of you who want to do a little playing with it, to test it out. It's again, couldn't be any simpler. You can probably all design it yourselves, but just to save you a little bit of time, there it is. And then for my exit, now you could tweak the exit a little bit. All I'm using is the EMA for the slope, right? If it gets on the other side, take me out. But a very, very basic algo. Nice result, right? That's the point here.